Yeah. So good morning. Let's start with the market review for this week. So we always look at the international market starting with US and then Europe and Asia to get an understanding of how the world is performing, because generally, even if our markets tend to overperform or outperform, we generally get back to align with these markets because the European and American markets are typically more matured than our markets. So we in the past few months have rallied against the world markets quite substantially. And right now, when we see the global trends, we'll understand as to what is really happening with us. So in front of us, we have the Dow Jones, which is consolidating for the last almost 2 weeks now. And this is the adaptive average. It has not been able to break and close below that. It is holding above that. And the consolidation seems to be pretty strong, irrespective of the news that is coming at their end. Nasdaq is good on the higher time frames. The lower time frames is touching 40 and reversing. This is something we discussed last Saturday also. And this is a good point of support for Nasdaq. And hopefully next week or next 2 weeks, it should reverse from here. Any close below 40 on daily will only show a little more bearishness on the short term. Nikkei is again similar. It's holding up well on the longer term timeframes, and the daily sideways. It's not weak. Germany is sideways clearly. It had gone about the all-time high we discussed last week. And after that, it hasn't made a newer low, but as such, but it has been consolidating. USD INR is clearly trying to break out over here, and it made a good bullish candle yesterday. If the trend continues, then it'll give a good breakout and rally up further. Now, when we see the global markets, most of them tend to be sideways in the short term. The longer term trends are intact in all of them. So it is likewise in our markets as well. So this is a comparison of the Indian markets. On the extreme right is the previous week, how it had closed, and the center one is the current week, how the market has been. While last week it closed 0.5% down, it's more or less similar for the Nifty. Bank Nifty also has been a little more selling pressure seen versus the Nifty itself. Metals has held on, IT is held on, IT is still about 1.5% this week. Other indices barring FMCG and reality are flattish. Midcap has done fairly well. Others are down. Reality last 2 weeks and FMCG has been clearly falling last 2 weeks. Nifty is very similar to the Nasdaq and DAX and all, where we see the longer term time frames being intact and the daily chart showing sideways movement. So trend clearly on the longer term is intact. Short term, as I said, probably because we had rallied way too much versus the other global peers, we are consolidating, and a little consolidation is stronger than what we see on the global indices. Now, this is something that I had shown a couple of weeks back when there was a range breakout about 18,800. That range still remains same, just that we are not seeing a very strong uptrend the way we see in stocks. There is a consolidation happening. It will consolidate, maybe it will retest, that I'm not sure of, and then it will continue to hit the target of 20,900. This may take time. This may not be very smooth rally up because of the V-shaped recovery that we had seen, and this a very quick upside. Now hitting the target over here may not be very easy or very smooth. Bank Nifty, on the other hand, monthly has been still in momentum. The daily has, the weekly has gone sideways. The weekly has gone below 60, and the daily has just managed to close below 40. So Bank Nifty is a little weaker compared to all other indices currently. While for the longest time, this was the strongest. Usually I've seen that, Bank Nifty consolidates a bit and comes back because of the heavy weightages of banks. So this can be a temporary phenomena because the overall trend is still strong. FMCG, now very clearly everyone can identify after the explanation, daily, weekly, monthly are strong, daily is at 40, may reverse. So this is another sector which should bottom out at these levels. PSU Bank, it went close to 40 on the daily while the longer term time frames are strong, and it has reversed. it has tried to hold on for the last 2 days. Once it crosses 60 on the daily, you will see quick momentums in PSU banks. So I couldn't update this. The sector still remains the same as the last 2-3 weeks that we are holding on. There is no much change in the sectors. We'll quickly do some stock reviews. The stocks we are holding, there's nothing much to add in that because the patterns hold on to whatever we have discussed and the reason why we have bought. Marathon Gen X, I have not given this particular stock on our WhatsApp, but we have discussed this stock twice in a weekly review where I said that, not everything can be bought at our end. So there's certain stocks that you can look at your end after the patterns that we have shared. This is doing pretty well. In fact, the results were out day before yesterday, and the results are quite strong. It's a small company. You can keep that in your portfolio. The target of 600 is likely to be seen going forward. It's a very nice clear breakout with good volumes. ICICI Bank, like last time, it is just hovering around the support levels. So should reverse from here. If not, we'll have to take a call to exit this. PNB, there was a false breakdown after a breakout and it is back in momentum. Very often it happens that stocks do give a false breakdown and then they reverse. So if PNB holds about 62.5, 63 levels, it's another good level to add on to. So PNB is back on the radar for a good upside. Praj Industries that we have given this week, it's holding on very well. And good volumes again in this. Yesterday, though it was down a little, but the trend seems to be pretty strong. So those who have not added Praj can also look at Praj for the longer term. Sorry. So this is the market review and stock review for this week.